Hi everyone, today I'm joined by Nareg Kaprielian with Huntington Mortgage. Good morning, Nareg. First of all, did I get your name right?
You A-.
So first of all, tell us a little bit about yourself.
Hi guys, Nareg here, nice to meet you. I've been doing this for almost 11 and a half years. I'm a mortgage broker, banker, mortgage guy, that's what I specialize in. I treat this as a career. This is my career, it's not a job for me. Went to undergrad at USC, got my master's from Cal State LA. I actually learned a lot more in my master's than my undergrad, but I'm built to, I built myself to love and do this job as a career. I love doing loans. I love helping people accomplish their real estate needs. And the foundations of my business are based on like the love I have for real estate and the love my family gives me. My beautiful family right here. I got my dog Rosie, my wife, my twin boys, Philip and Isaac. I have twin boys, fraternal twins, not identical.
I bet twin boys keep you busy.
They do keep me busy. The first year and a half, 2 years was very rough, but now it's kind of getting easier because now they keep each other busy. They follow each other, and they're actually very, very obedient boys, which is very rare, and I love that. Yeah,
great.
Yeah.
So one of the reasons I wanted to get you on here is because often a lot of people go straight to their bank to get a loan, and I highly recommend people not doing that. Go to your bank, but also shop around. Speak to a loan officer like yourself, because not only can you potentially get a much better rate and save yourself money, but it's the level of service that people like yourself offer, which is so important. So in your opinion, what makes a great loan officer?
What makes a good loan officer is two things. Number one, you got to put yourself in the client's shoes. The moment as a loan officer or a bank guy or a mortgage guy, if you're not putting yourself in the client's shoes, you're going to lose the client. You got to understand the human condition when you do finance, mortgage finance. Twofold. On a purchase transaction, it's a lot of stress. We do this job every day. We finance $1 million homes, $2 million homes, $400,000 condos, $1.25 million triplexes, $5 million apartment buildings, so on and so forth, everything. And that singular transaction to us is one of 20, 30, 40, right? But to that client, the consumer, that's one. That's their down payment savings for 5 years, 10 years. That's the estate they're getting money from to do this. That's the property they're buying to sell, to buy and leg up or leg down or whatever. It's all in for them. And the moment you don't understand their condition, whether it's they're moving and they have moving trucks and they have kids going to new schools, whether it's like an exchange, it's a tax deferred event, or it's a business purchase, or whether it's like an investment, they're getting their feet wet on their first investment property. You need to understand the singular human condition for each borrower on every singular purchase transaction. With that said, then you pivot to the refinance world. Then you become a debt manager. You're also a debt manager on purchase. As a loan officer, you got to make sure your consumer manages their debt right. Let me tell you why. Two reasons. Number one, for us, and there's a selfish point, if I help my consumer manage their debt right, they'll come back to me for more loans. And if they come back to me for more loans, and I manage their debt right, they're buying quality assets with the right debt, not the lowest, not the highest debt, not the debt with the least amount of fees or the highest amount of fees, the right debt, right? So that's when we position our clients in the refinance world. We become more on the debt management side, so they understand. We don't want to put our consumers in a loan where they're not going to be able to spread their wings on the next deal, or that loan is going to suffocate that investment, or they're going to buy a property that we genuinely don't think they should buy. So that when it's like refinance to pull out money or lower their debt profile. I have people coming to me and they want to do a cash out refi. Why? Okay, the first question is, what do you want to do with the money? Okay, I want to do this, this, and this. Okay, this is a good idea. Let's expand here. Okay, I want to do this with the money. No, that's a terrible idea. Let me tell you why it's a terrible idea. Let me tell you why you shouldn't be talking to me about a cash out. Let me tell you why you should just keep the mortgage you're in right now, and we should do this down the road. Let me tell you why it's a great idea to do X, Y, and Z. Maybe you come to me. Go ahead, James.
And yeah, I completely agree. I think it's important when you're working with a real estate agent or a loan officer that people have your best interests at heart. And and the truth is good loan officers and good real estate agents, they put the client first. They do put themselves in their shoes, what you talk about. And one of the reasons we do that is we want to help that person. But we're in a business where repeat business is absolutely crucial to us and getting referrals. We're not like these massive companies where you just employ someone and they don't really care if the deal closes on time because they've got so much business. They're getting paid a wage. They take the weekends off and the evenings off. And it's completely different business. Whereas we really care about the clients for a multitude of reasons. So you really hit on a good point then. And what areas do you guys really specialize in? You know, what your perfect client and what products do you specialize in?
Okay, I only do loans in California right now, all of California, right? I have a license in Nevada, but I'm not set up there yet. That's my next bastion. So I see a lot of that happening. But let's scale back a little bit. I do everything in California, everything. Anything you want, I will finance in California. However, my specialty in the areas I know specifically are along the foothills, okay, and specifically Glendale, La Cañada, Altadena, Pasadena, Burbank. That is my bread and butter. Okay,
yep.
That's where not only will I do your loan there, 100%, I'll do it anywhere in California, but I know the streets, I know the school districts, I know the good and bad pockets. I can add a lot of value in those specific areas.
So if someone wants to get a $2 million loan or a $200K loan, FHA, VA, all of that, you cover it all.
Yes, all of it, all of it. I do every loan under the sun. Okay, sorry, let me say this. I finance every property under the sun minus mixed use. I don't do those. So I don't do mixed use at all, zero. And then when it's 5-unit apartments and above, I have solutions there too. But my bread and butter is 4 units and below. So at single family condo, 1, 2, 3, 4 units. That is my absolute bread and butter. I can do any of those loans as long as you qualify.
And you talk about qualification. Now, one of the first things that I highly recommend is getting pre-qualified before you even go and look at homes. There's nothing worse than going and looking at home as a real estate agent and then finding out afterwards that they couldn't qualify for that particular home and they got all excited about it, and vice versa. Sometimes they don't understand that you go and look at loads of homes. They're like, oh, I don't really like any of this. When we could have been looking at better homes because interest rates are so low at the moment, people can often afford more than what they realize and their payments are lower than what they realize. So in regards to getting pre-qualified, what do people need to do to get pre-qualified?
Do what I say. And I will do what I say because that's the number one thing. Follow my process. That's the global. Let me go specific. Credit. Number one most important thing is credit. You cannot have income. You cannot have enough down payment. You could have a job you just got, right? That is all easy for me to fix. I cannot fix credit. You've got to have good credit. And if you don't have good credit, that's okay. There's solutions there. Okay, we can finance loans with a credit FICO score as low as 640 on a majority of products. FHA, we can dip to 620 and stuff like that, but on conventional, jumbo, non-QM, stated, all that stuff, we want a minimum 640. But I say good credit because you're going to love the terms of good credit. The FICO, the rate offerings, the fees are much more palatable with a good credit score. So when we start with credit, that's the most important. Then we then ask for documents, income documents, asset documents, proof of ability to repay, whether it's your proof of rent or a game plan for down payment. We collect those documents early on. And we then frame your credit, your loan application, and then all your documents we analyze, and then we look at what you want to buy. You want to buy a new house for your family? We'll do that. You want to buy an investment property? We'll do that. You want to refinance and do this, that? We'll do that.
Great. So in regards to credit, what would be, in order to get the best rates these days, what type of credit score are people looking for? Ideally, what's the ideal credit score?
It used to be 740. It still is, but then, 740. But now a lot of these lenders are like going, like, if you have a 760 and above, they're giving some insane incentives. So, there's some really good incentives at 760 and above. Ideal. 740 is the benchmark. 740 and above, no problem. That's the minimum. The moment we dip below 740, the pricing gets a little worse. And then under 720 gets a little more worse. Under 700, it tends to be more expensive than above 700. So when you have a credit score with the sixes, it's going to be a little pricier, and then we'll explain it to you why it is, and then we'll then see your credit, and then maybe give you advice on how to fix it.
Well, the thing is, people that are thinking about buying, often people aren't thinking of buying this time of year. We're in December right now as we record this. They're thinking about buying in the spring. This is the perfect time to chat to someone like yourself to review all of this, because you might not be thinking about buying for 3, 4, 5, 6, 12 months. But things like your credit, if you've got a 690 credit score right now, there might be a couple of things that you can help with to get that credit score up. So that's why I always say, chat to someone like yourself now. Little tips as well that you can give out. I mean, I've had it before where people have got a car loan just before they were going to get a loan. I gather big purchases like that are probably a no-no right now if you're thinking of buying a house.
Yeah, correct. So that's a very good question. When somebody comes to me and the pre-approval is janky, where there's credit issues, there's not enough income, or there's not enough assets, we then take that pre-approval process and go like, listen, you're not going to get a pre-approval certificate right now. But now we're going to plan this out 3 or 4 months down the line. Perfect example. I'm obviously not going to mention names or anything. I had a client come to me about 2 weeks ago, pretty intensive pre-approval, a lot of documents, everything. It's just not working out. I can get him a loan, but he wants to go 10% down. I can't do it unless it's 15. He wants a rate in the 3s. I can't, because his FICO is 670 or 680. There's room to improve it. Okay. Then I'm like, we have to get it above 700. So he's in a bucket where I can get him 10% down if he had more income. I can get him a better rate if he had a better credit score. I told him straight up, this is your offering if you want to buy right now. I highly advise against doing this. This is a 15% down. The rate's in the mid to high 4s. If you just wait 3 or 4 months, file your tax return, you get you the 10% down. Improve the credit based on this, and this, okay? You're going to go from 15% down, higher interest rate, higher payments, wait a few months to we'll get you into a lower rate bucket. We're going to get you the 10% down, and the process will be smoother. The cost of finance, the experience will be a lot better. So just be patient. So do you really want this property? Not really. Then there's no reason. Let's not do it. Wait. I say wait.
No, I agree. As a real estate agent, I always ask, find out more about the person's situation. And quite often buying right now, that second, and overpaying for a property or getting an interest rate that's not right, you're best just waiting. Completely agree. And one of the things that I highly recommend is it really is a team. The loan officer and the real estate agent and yourselves working together as a team with this. So I always think it's so important to work with a real estate agent and a loan officer that you can contact that are good at communication. Like you can clearly see you've got great communication skills. And it's so important to be able to have that, because one of the things that we always do when I write an offer is often I'll get the loan officer to speak to the selling agent and be able to sell that person so that that listing agent knows they're going to close. And I know for a fact that you'll do everything you can to make sure that the deal closes. So is there anything else that you want to talk about today? It's
funny you said I'm a very good communicator. I just hope you can convince my wife that, because she thinks I'm not. So in my personal,
that's different, because our brains always working. We're always working, so they always moan at us. I agree. Yeah.
Well, I tell my wife, when there's numbers attached to communication, it's great. And at home, it's like, oh, you forgot to feed the dog, or this, that, and the other. I'm like, God,
because we're working 24/7. That's why.
24/7. I try to turn it off at some point. I've been doing a better job of doing that. I've hired a team. I have a really good team. Just to give you frame, like the team I have, I currently have 3.5 employees. Basically, I share a marketing assistant with my business partner. I have 2 guys that work full time on my pipeline. I just hired a 3rd person. He starts the first week of January. When you come to me to do a financing transaction, a mortgage transaction, you get me in the team. So how it kind of works in our system, and I'll give you some other feedback too, is I handle the global stuff. I handle all the negotiation with the agents. So what I like to do is, if a client is making an offer on a property, I happen to know that agent, I will then, on the listing agent, I will then make a phone call. I will then vet it even further with that agent. I'll put my name on the line and kind of make that deal happen. I'm the glue on that deal. So we do a good job of convincing the listing side agent that we have the buyer for this home. And it might not be the highest offer. I'll tell you this. I've had a lot of agents, listing agents, see my pre-approval on the offer and take my offer, even though it's a little less, because they know I can close. And it's nothing negative to the other buyer that made a higher offer, but they convinced their seller, like, hey, listen, we got 2 offers. They're pretty high. One is a little lower, but I know this loan guy, and I know he's going to close this deal. And I know he's going to make sure his buyer.
The truth is, I often will get offers and I'll look at it and a pre-approval will be there. And I go, I know that bank can't close less than 45 days because I've been on the end of it before. So I then have to worry about that particular offer being honest with you. So when you know that there is a loan officer you can rely on, it helps you.
Yes. It helps you, and you then help your buyer's agent, the one representing our mutual client, get into escrow. So we're working as a team to get them into escrow. It's a double value add. Not only am I making sure you know what you're doing on the loan, you're educated as a consumer from a debt perspective, but we're making a deal happen for you. We're deal makers on the deal. You want that property, you want this, that. We kind of make it happen,
Awesome. So you've talked about what areas you cover, etc. You can do anywhere in California, but you've got your specialty areas, close to LA. And how do people get in contact with you?
Yeah, very simply put, you call me. The first phone call is a global call. All I need is for you to text me your full name and email address, and the full name and email of anybody else that would go on the loan with you. I put you in my system. My team will be in touch. And at that point, it's document procurement. When my intake guys take your file, they analyze it. I do a global analysis, and I'll call the client back, and I will personally send you rates, quotes, fees, all that. Then I'll go over them with you. So the most important thing, when I issue you a pre-approval certificate, I issue you payments, rates, fees, everything. I want you as a consumer to be very aware of what you're in for before you're even going to 15 open houses. It's so important. This whole bait and switch crap is old school. It's not fun. It's not good business, nothing. Here are all my fees up front. Here are the escrow and title fees. I didn't know the escrow and title company, but I think based on this loan size and this home size, it's going to cost you about $5,000, $6,000. That's fine. I let them know the fees can change on that, but my loan fees are rock solid because I dictate those based on how I pre-qualified you.
Yeah. Perfect. Yeah. Well, I really appreciate you coming on today.